To close off the week, I want to bring on two of our top editors for a wide ranging conversation on the crazy events of the past few days, not the least of which is investors' fears over large capex spend. To break it all down, I want to bring on Martin Pierce and Laura Mandaro. Welcome back to the show to the both of you. It's great to have you here.
Hey, Akash.
Hi,
Okay,
Akash.
so Martin, I will start with you. Tech had a bit of a rough week, at least from a stock market perspective. We saw all the earnings come out. Capex was front and center. What are your key takeaways and key questions coming out of this week in Capex?
My key takeaways are people move in herds and they don't really think independently and they freak out. They see everyone else freaking out and they freak out. And I think um, really these big companies which are spending a fortune on capex, they can afford it. They've got the most to gain. And I think people who are freaking out about Google investing a lot or Amazon investing a lot are kind of missing the bigger picture.
Hmm. Laura, any takeaways from you on Capex?
No, I mean, as Martin was pointing out, I'm not going to disagree with him here in his briefing. I
Feel
mean,
free to disagree with me. I'm usually wrong.
Well,
well,
only
and I
only
think
once.
as it's been said on the show, it's not, the revenue growth was very high. I mean, that's what's a little bit confounding about the stock market action. I mean, it's not confounding in the sense that there's a lot of momentum in stock markets always, and I'm sure many traders, regardless of the fundamentals, don't want to be on the other side of a wave of selling. But for the average investor, is it really smart to time the market on something like this? I wouldn't think so, because as we've been pointing out in our articles and briefings, the revenue growth at companies like Google have been pretty remarkable. So that's the other side of it.
Okay, so let's go from capex then to the SaaS apocalypse, which has been playing out. We were just talking about in the last segment too. So the big question is AI going to replace enterprise software? That's what every trader is thinking about. It's what everyone is selling these stocks for. Look. I have a theory on this, but Martin, where do you think this is going to play out?
God, that's a tough question. Look, this is not to sound really predictable, but this reminds me a little bit of the cord cutting debate, which, obviously cord cutting has destroyed the entertainment business. And over a period of about 10 to 15 years, it has wiped out the money that the cable channels used to make as people moved over to streaming. Now, it took a long time for that to actually happen. I mean, I was writing about that in like 2009, 2010, 11, 12. It's really taken until the last 3 or 4 years for it to become a reality, and the market didn't anticipate it quite as early as it has here. So I would say, look, I don't think we yet know which of the software companies will get hurt. I think obviously some of them will, but it's a very complicated industry. I think the market is overreacting. I definitely think if you look at some of the stocks, some are trading at very low multiples, despite the fact that they're still growing fairly well. But I do think as well, I mean, Laura was arguing earlier in the week that there will be, here, Laura, I'm stealing your thunder. Sorry to do that to you. Um, but Laura was arguing that there might be mergers and I think that that's correct. Actually, I should let Laura talk about that.
Yeah. Okay. So Laura, so which mergers are we going to see?
Well, I would just want to sort of go back to what Martin was saying about the long, drawn out process of this, because, we and our reporters are really avidly trying to figure out what happens. I mean, if a stock is down 80% in a year, right? It does, there's pressure on the CEO. And the board to do something. And, for a big pocket of the market, this could be seen as a great buying opportunity. And for PE firms that have historically loved to buy enterprise software because of the cash flow, it's recurring revenue, you can borrow against it. This would seem to be great. And I do think we hear that sentiment. I was just talking to a bunch of late stage investors last night, and yes, they are thinking about bargains, but there's I'm getting a sense of there might be a period of paralysis because, especially when you have market gyrations like the ones we've seen in the last couple weeks, people don't really quite know what's going on. And I'm not saying that lasts forever, but that could, just like we saw after any market correction after 2022 when the interest rates spiked, there's this reset in valuations, whether in the public or private markets, and the solution to that doesn't happen necessarily right away. I mean, at a certain price, I'm sure some of these software companies are going to look attractive for somebody, whether it's a stronger competitor, which leads to a merger of equals. To a financial sponsor, like a PE firm. But right now when things are selling off so hard, and there's this, uh, philosophical question out there, like, is this the end of software? Which it seems silly, but like people are asking that question. I mean, that's the other side of the debate. And these are smart people who want to make a buck, right? They want to look for that return at a certain price. So
Can I
it,
just
it
jump
yeah.
in here on this point? The same people, or maybe not the same people, but don't forget there's been all these people over the last 5 years claiming that crypto is gonna take over the world. Well, so far it hasn't really, has it? We haven't really seen very much of a use case for that, and now this week, crypto is selling off. So, I think we have to be careful before we believe some of these, the hypesters who claim, "Oh, this new technology is gonna transform everything." I mean, it does sometimes, but not always.
I don't know the answer to that question, and I'm certainly not, like, validating it. I mean, look, we are all in the news business, and we write about things that happen. One,
I
sort
like
of
I
short-term
like
outcome.
to actually predict things, Laura. That's
Well,
different.
one possibility for us, is that things sort of stay stuck a little bit, right? Like, there is this big catalyst to something happening. The stock market moves, and so maybe, companies that look too expensive 2 months ago or 6 months ago now look very affordable. Their market cap is $2 billion. Like, that is makes it much more affordable than it could have been. But if the board is or the PE firm is uneasy about like kind of the ultimate direction, maybe that stalls things. I don't think they stay stalled forever. I mean, I think after every one of these market corrections, and we just saw that after the low interest period, it took a while for the private capital markets, the private funded startups, for those valuations to kind of get to the level that investors were willing to put more money in. But it didn't happen. I mean, we were on that story, from day one,
Right.
and it's actually a slow development that takes place over. I mean, it's still taking place, right? Like the Brex, we saw that takeover, which was sort of a valuation reset, and so. As Martin is saying with cord cutting, this could take place over several years, right? Like the story doesn't like get resolved in the next two
Right. It's
months.
just that the markets move much quicker now
And
than they did.
it will calm down, and then things will sort of stabilize a bit, and then, you know, then there'll be one more of these in a year or 2, and it's just gonna take a whole long
Well,
time.
I mean,
One
and
thing
this
I
is
would
what's all these when the AI companies go public, inevitably, whatever, five, two. Well, this year we know that the big companies are looking to go public, but all these application layer companies. I mean, maybe there will be a wave of
but
the
don't
AI.
forget, hang on a second, this AI stuff, let's just be real. We don't yet know whether any of these AI guys can actually make any money. The only people who make money out of AI right now is NVIDIA. So, this is we are still will OpenAI ever make any money? Who knows, right? And
Right? Will that prevent them from going public, though? I
no,
mean,
what
this
will
doesn't.
happen is they will go public, investors will be like, "Oh my god, this company is losing a boatload of money," and then
So
Sam
in that
will be like
scenario, I think
Sam
that
will
could.
be like, "Oh, it'll be fine in 5 years' time. You're still losing a boatload." Then he'll be fine, so,
I mean,
Okay.
in that I'm very, very curious about it because, we've reported as much as we can about the financial activities and projections of these companies, but it's just a tiny bit of what you'd have with a public company. We don't really understand some of it, and um, I agree. When these companies eventually go public, investors are going to get a much closer look, and it may be they may see like much more volatility or customer concentration risk, which we're already sort of hearing whispers of, than investors really like. I mean, in theory, that could make some of these boring software companies look,
Look good. Yeah, they look
great.
really
Exactly.
good. Yeah.
Yeah. So
So in
Yeah.
other words, the SaaS companies just want the AI companies to go public so that they have some legs to stand on
I
it. They
mean,
could
maybe.
yeah.
I don't know. I mean, I don't,
Well, having a bottom line is good, okay? So that's always good.
yeah. I mean, there's I mean, I think if I think also with these software companies, the ones that are not showing very strong growth and, and earnings, but the growth is actually stalling, which, it causes there's plenty of the kind of flatlining software companies, and this was happening even really before AI became this big bogeyman.
Right.
I don't see, like, why an investor would choose that. You would just go to the cream of the crop,
Right.
for SaaS. So
Great. Well, I wanna thank you both for coming on.
are
That
we
is
going
Laura.
to debate forward deployed engineers?
Okay, fine. Okay, fine. We'll do it. We'll do it. We'll do it quickly, okay? Just for context, okay, for listeners and viewers, there was a debate in the office earlier this week
I was actually
between
at home. I was calling Laura
all right.
late
So
at night.
Martin doesn't like the term forward deployed engineer, and Laura says what? It's okay?
well,
She
look,
did defend it. Come on, Laura, defend it.
I defended the use in this story. Now, for listeners who are not so in the weeds, what this refers to is a type of particular
Consultant.
engineer.
It's a consultant,
It's a right.
It's a
Somebody
consultant.
engineer goes in,
but
helps you
that's a
implement the
boring
AI
term.
software.
That's a
It's what the
boring term.
consulting
We have to give them this ridiculous term.
right, the
Look,
consulting
we
firm
didn't do it. It's Palantir, which
That's fine.
likes, employs people who used to work in the military. They have co-opted a lot of military terms, which is something that happens in journalism and language in general. We use terms out of sports and military, and I particularly don't like that because I think it's jargony. Deploys, means that
Oh, you
but
don't
you were
like it.
okay but
I
you were
don't know.
okay using it in the
Akash,
store,
can I
but
just say
I
that
was
Laura is now changing her tune. She was
I was okay using it because I think in this you know, tech labor market, I should say, not general labor market, it means something in particular, and I think there is a bit of a race. I mean, I would not die on this hill, I would say, but I do think
well,
that
you changed your tune, so I
I
think you
thought it was
proved that.
appropriate for this story because I think the term consultant means something different to most people, and it does not
Yeah.
relay what forward deployed engineers has meant with, the AI startups and the big AI startups like Anthropic and OpenAI, and the small ones like Distill that are building their model around hiring these highly technical consultants or sales friendly engineers, whatever way you want to call them, and
Yeah.
putting them in house at these companies. And I think it means a particular thing. And I think there's some competition here because I think the companies, like OpenAI, are realizing if they really want to get the large corporations, this enterprise wallet, then they need to put people on the ground there, and that's an expense, right? Like that's not just like go into a website and set up your API calls. This is like you're employing people. They're I mean, this is consultancy, and that means a different kind of cost, in my opinion. So, I think there is interest in that topic, and is that really what like you're going to need? And it says something about the like the I don't know, ability to adopt AI. I think when you have to have these
Well,
kinds of
look,
people.
Martin, I mean, look, Martin, you've been on the show here. You've said AI is going to take all the jobs. What are people going to do? This is what people are doing. I mean, I think that this is
coming up with stupid terms to describe their
but it's it's a revised job description, it's a forward thinking job description. Look, at some point I'm sure maybe you will use it in a briefing. We'll see.
I am
I don't
never gonna use it.
Got it. Okay. Well, when you do, then I look forward to bringing you back on and telling you. Okay. Thanks for coming on. That is Martin Pierce, our co-executive editor, and Laura Mandaro, our managing editor here at The Information.